Welcome to the Wealth Workshop. Whether it's investing, retirement, or building generational wealth, we're here to simplify it all. Thanks for tuning in, and I hope you enjoy this episode with your host, Terrified of AI.
Hey everyone, this is Terrified of AI with another installment of the After Hour Community Spotlight. I think this is number 8. I'm going to start losing track here and not be able to say the episode number shortly. But thanks for tuning in today. Another quick background about myself is I bring a little over a decade of financial professional experience to the table, but that's mostly in the realm of financial planning, tax strategy, business strategy. And what I don't have a tremendous amount of experience in is that short term quantitative and technical analysis kind of trading. And selfishly, that's why I'm doing these series is to learn more about traders who are successful in that space and share that information with you guys. So I'm really excited about today's guest. We have AfterHour. I've heard amazing things about him, haven't gotten a lot of opportunities to interact with him. So thank you so much for hopping on this episode, and I'm excited to jump into it.
No, thank you for having me on. I've watched so many of your episodes now, just hearing about just everything that you're doing, trying to learn and pay it forward with karma points. I'm excited to be here too.
Awesome, thank you. So I wanted to give you an opportunity to introduce yourself and tell the listeners a little bit about you and your background.
Yeah, sounds good. So call myself AfterHour online. My name is William, so you're welcome to call me by that as well. I've been trading for just a little over 5.5 years now. So actively trading, so that's swing trading, stocks, leverage shares, options, futures, and then investing since 2011. So just like the year I got out of high school, 1 year after I got out of high school, started investing. And yeah, with COVID, and just seeing a bunch of people make a bunch of money, figured that I would probably try my luck at it too. Turns out I really enjoyed it. I paid my my tuition. I started out my journey with like in the hole quite a sum, like multiple tens of thousands of dollars. Figured that there has to be something that I'm missing, and just took a really deep dive into options and what really moves the market, how the dealers trade. We always complain that the market makers are always the ones that make money in the end. Well, I figured there has to be something that they know that we don't, that retail traders can somehow replicate in some way, shape, or form. So that's a little bit of my background. I was, since my trading, it's like 6 years now, just about almost 6 years. I've been around like the Discord space a lot. So for the majority of my time trading, actually, I've been around the Discord space. Worked for multiple paid Discords, and then I worked for a YouTuber for for a short stint. Actually, I'll say that. And I actually just joined QuantData in 2024 February. So it's actually just been a year.
Nice.
So that's a little bit of my background.
Very cool. And we'll get into QuantData here in a little bit. I'm definitely interested in hearing more about the business model there and what you guys have to offer. How long have you been a part of the After Hour community now?
It has been just over 6 months now on After Hours, so not a long time. But I heard about the app, I think a little bit longer than 6 months. It just took me a bit of time to like subscribe and make an account. I wasn't sure at first, right? I'm sure everyone was kind of skeptical at first. A new
Oh
app
yeah,
coming through. It originated from Wall Street Bets, right? One of those forums, and I just wasn't too sure if it was worth my time. But turns out I met a lot of people, made a lot of friends already in the short time that I've been there. And look at me now. I'm here with you.
yeah. There we go. I can totally agree with that. I think my first actual post on After Hour was within probably the second day that I was just lurking on the app. I think I posted at SIRJACK, hey, this community seems really cool, but we all come from Reddit, where it's not like this at all. And how
Hmm.
concerned are you with that culture and bots coming to flood? I was extremely skeptical as well when I first joined, so can definitely relate from that perspective.
Yeah,
Wh-
it's still scary sometimes. I still see a lot of I mean, I don't want to outright say it, but I will. It's a lot of degeneracy
oh, there's
that
definitely
I
that.
can see. Yeah, it really relates back to the Reddits, and but we'll see. We'll see how it goes. It's still early in their journey.
Exactly. And we'll get to the community a little bit more here in the interview, but wanted to talk a little bit more about your early investing journey. Um, so I know you said you started investing right
Mhm.
in 2011 around there. What inspired you to start investing?
You know, it's it's an interesting thing. So I live in Vancouver. It is the most expensive real estate in all of Canada. Actually, I think we actually beat New York a couple of years ago, like 2 years in a row that we beat unaffordability in New York, and that's in North America. Like New York is the absolute epitome of
Oh yeah,
unaffordability, right?
for sure.
So I just early on, I just didn't really know what I was doing. I was really fortunate that my parents didn't force me to go into college or university right away. I kind of convinced them like, hey, I don't want to take out a bunch of student loans and go into college or university and spend a bunch of money on something that I don't even know if I want to be like doing in the future, right? Which is what a lot of young kids did early on. So I actually just worked. I worked my job. I worked at McDonald's for a long time. And then I ended up working like a couple of other, I can't even remember all the jobs, like some hotel. I saved all this money and I just like, I had nothing to do with it. I was learning about things to do with my money, like investing in like real estate or something like that. But again, in Vancouver, it was impossible unless you had like a large sum of money to do so. So the next best thing would be stocks. And I did a little bit of digging into it. I saw that there was a lot of opportunity for your money to just grow slowly. It wasn't going to be I wasn't looking for like $1 million overnight, but I did want to put my money to work somehow. Um, so first stock I picked up was just Apple. How I came up with it was just, I just saw people buying iPhones back then. I couldn't really remember. Like, I just felt like, oh, you know what? This is probably going to go somewhere in the future. And yeah, I wasn't one of those like ETF investors. I can kind of attest that to a little bit of luck. And then I also thought to myself, like, hey, I'm really young at the time, right? I was only 18 years old. There's probably some room for me to gamble in the market. And in the future, if I needed to pick up ETFs like SPY or something, I'm sure there would still be opportunities to do so. But I wanted to see if I full ported my savings into something, what would be the outcome of it, right? Again, I was still young. I still had my job, still had a couple part-time jobs. Like I wasn't gonna go broke from doing so. And that was my first taste.
And you
So
picked
I
Apple.
wanted to.
You full ported.
I did
Well,
full
there we
port
go. You
Apple.
picked a good one.
I did. Yeah. I can say, I don't recommend that for anyone now, but even though I do know people to this day right now that are full ported on Palantir, which
Mm.
just had really good earnings, by the way.
Oh yeah, I have a decently large. I have a really strict rules-based strategy, and part of the rules base is trying to pick up stocks that are have a really good momentum to them. And Palantir and Marvel both hit that screen, so I have a pretty big holding. So fully
I
aware they
love it.
had great earnings today.
I love it. And actually, part of the full porting theory was actually the fact that I didn't really see anyone, even back then, I didn't really see anyone get really wealthy from diversifying. And I felt like if you're young and you have the ability, like if you live at home with your mom and dad, which back then I did still, so it was like if you have that flexibility and you're not going to die from it, you might have a good shot at starting off your journey in the markets at a huge acceleration, right? And so that happened for me for Apple. And
Beautiful.
I just tunnel visions all throughout. I think all the way until like just before COVID, like 2018, it was when I actually started to diversify, when I actually started to focus on the market and actually try to trade it.
Gotcha. Very cool. That's a definitely an interesting story. I don't know that I've had anyone give a full porting story to success yet, which is cool because I agree. I don't think anyone gets like massively wealthy off diversifying. Like SPY's done really well, but it hasn't done as well as Nvidia, right? Just as an
Oh
example.
yeah.
Um,
Oh, that's
so wild example, but proves your point. If you are looking to jumpstart and you have the ability to risk like that, because you could certainly get it wrong, like, or your
Mhm.
timing could be wrong. Like I was looking at a Microsoft chart the other day, and I had changed my strategy for my rule space account to what it is today, right at the peak before it dropped in 2020. It dropped earlier than a lot of the other ones. And I was so confused while my all-time return was 5% when I'm like, it's been crushing it for 3 years, and it's because I started at the wrong time. So there can be a lot of timing risk and and stock risk associated with full porting. But if it hits well, then it can do wondrous things for a portfolio. So I completely agree.
100%. And I'm sure, with your career and your profession, like you kind of changed different investment strategies for the person's age, right? And
Oh,
so
certainly.
I definitely don't advocate for full boarding like that. Unless you're young. Like again,
Yeah.
I was living at home, had a job, I didn't have no student loans, right? So I felt like, I wanted to do something with my money. I wasn't gonna die. So that's what I did. But I think that doesn't really change the whole trading journey of it. That's a whole different story.
Which I definitely do want to get into as well. Um, but before we get there, um, and maybe this gets into the trading strategy, but did you
Mhm.
have anyone mentor you or kind of guide you when you were starting out? And maybe you didn't have that when you were first starting with investing, but maybe that happened closer to when you got more into trading.
Oh man, yeah. I think first of all, I'll say this: like, don't for people who are like shy and people who are like who are in discords and after hours and stuff. You should definitely go out and ask the stupid questions,
Oh
because
yeah.
that's actually how I found the majority of the people that are a lot smarter than me. And I just asked them, hey, like, can I get you, a Starbucks gift card or something? Like, can we sit down for like an hour and let me just pick your brain, right? No one's gonna say no to that. Usually, when you show that you're putting some sort of effort towards learning something and you really are trying, someone is gonna see that effort and they're gonna be like, okay, you know what? Maybe I can sit down with this guy for like an hour, right? Not everyone is a jerk,
Oh, for sure.
you
Well,
know.
I think most people want to help other people. Um, it's just that if they do offer that and you don't follow through with the level of commitment that it seemed like you wanted, that's where it can turn bad. Um,
100%, hundred
but
percent.
but no, I completely agree with that.
Yeah, the other turnaround is like all the people trying to like, oh yeah, I'll help you. Give me like $79 a month.
Oh yeah, right,
That's where
right. The
I
people
say
who are like, "I'll help you," um, different than you going to ask people. So I would be wary of anyone who does that.
oh man.
But yeah, I think people generally want to help people. So did you have people that
Yeah, I
specifically you wanted to name drop? Or do you want?
name
You don't
drop
have
them
to
for
if you don't
sure.
want to.
Oh, I'm happy to name drop them. There's a guy on After Hours. His name is Umada, Umada. I call him my original mentor because I've known him for more than 6 years now. When I first started the whole trading thing, so to go back a little bit in time, so like 2018, I I kind of like we were starting to that was kind of the start of when things started to get a little bit rocky, right? With like COVID and all.
Mhm.
So I proposed in 2018. And then supposed to get married in 2020, and that's actually when I lost my job fully in 2020. But during the just before that, I was looking into options. I saw a lot of people making money online, and I was like, "Oh, I'm gonna try this." And it just so happened that this guy, Yumata, I was playing League of Legends with him of
Okay.
all games. I don't know if you know that game,
No. I've
but
played
yeah,
plenty of that in my time.
it just so happened that I was part of a League of Legends like server team, and we were playing together. And it's one of those nights where a bunch of boys are just playing League of Legends and we're drinking.
Oh
So
yeah, the
we kind of
homies.
open up to each other, right? And it turns out that he was like I was telling him, hey, I'm trying this investing trading thing, and then he was telling me like, hey, like here's all these things to look at, and let me know. And he didn't at that point tell me he was a trader yet, right? He thought in his mind that after he gave me all this homework, that I would just disappear forever. But I actually reached out to him after, like, hey, I did all this homework. Like, I want to ask you more. So, like, can we meet up for like because he lives in my city. So, can we meet up and like, can I buy you a bubble tea or something? We'll like hang out and let me pick your brain and stuff. And so that was like the start of my journey into actively trading the correct way, right? Looking at like volatility metrics, looking at Greek exposure, looking at options order flow, not all these charts and candles and stuff like that. And then when I started to learn a little bit more about sell side, there's a guy in QuantData server. He's not an after hours. He doesn't actually like social media, but you can find him on Discord. His name's D for D, and that's my other name drop. He's my sell side coach, and a lot of times that I might be in a dicey position that I'm not entirely sure how to get out of, or maybe I'm in a position that's going really well and I want to see how I can maximize it. He's one of the guys that I talk to see like, hey, can you help me out? Can we sit down for like a coffee and then see what you think of my position or my holdings here? So yeah, those two mainly. But I could name drop a whole lot more. I'm just not going to do that here. It's going to be a
No,
lot. But
no worries. There
a
will be
lot of
another opportunity for you to name drop some people, but not necessarily mentors, um,
oh, for sure.
in a little bit. Um, Very cool. Sounds like you were able to meet people, which I think is the big thing. Is you can learn a lot in books, but having someone there to directly answer your questions immediately after you feel like you've learned something, I think can be a really powerful tool. Um,
Absolutely.
so that's awesome. But speaking of books, um, or other resources, were there any specific resources that you found other than mentors that were helpful in your journey?
I'm a huge advocate for Tasty Trade.
Okay.
So I'm sure you're familiar with them. They're a brokerage, but
Mhm.
they actually have so much resources that even here at Quantdata, I even think about like, oh, should I remake some of their studies so that we can have our own content for it? But they've just done such a good job that there's just no reason to. So all of the Tasty Live videos, like their Tasty Trade Options Crash Course 101 by Dr. Jim Schultz. That's one of my favorites. I always recommend that one for people who are just starting out options. That one really shaped a lot of my view of like what options actually is, right? Because I know a lot of after hours, a lot of degenerates. I'm just gonna say it again. A lot of people doing like these like zero DTEs, full porting, and we're putting $1,000 into like spy calls for whatever reason because like two candles or two lines cross each other. Doesn't make a lot of sense to me. But when you dig into the actual probability metrics of what options is used for, right? Options is supposed to be the most risk defined asset that you can trade.
Oh yeah, you're the casino. You play the casino
Exactly.
statistics.
So Tasty Trade, 100%. S&B Capital, they have a lot of great work as well. I've talked to some of the traders that are there,
Can you say that
and
again? Sorry.
talked to some of the traders that are there.
No.
S&B.
Sorry. The S&P, like the
Oh,
500 index.
no. SMB.
SMB. Okay. Sorry. I just
Yeah,
wanted to make sure it
S&B
was clear for
Capital.
the listeners.
Oh, 100%, 100%. Yeah, they have a really cool library of resources as well, and it's mostly catered towards. I'd say a lot of their content is catered towards buy side, which is fine. That's what a lot of retail traders like. But I feel like if you're not following um, those two resources, you're missing a whole lot. So those two for sure. Books, I don't really go through a lot of books. I'm much more of a visual and like audio learner, but options for dummies. is, it's not even a joke, but I still reference that book sometimes when I'm like, oh, charm exposure is like, I forgot, like, what's the quick tip on charm exposure? I'll quickly grab that book and like I have it bookmarked already. It's really
Nice.
handy, really fast to use. Um, yeah, it's. I think those are my top three resources.
Gotcha. Perfect. And just so you know, I'm going to link either people that you've mentioned or other resources in the description so people can go check those out, um, so that it's actionable and they don't have to hopefully find what we were talking about. Um, what were some of the biggest challenges that you faced when you were first starting? Let's talk about trading. When you were first starting trading, what do you think the biggest challenges were?
Mm. I think some of the biggest challenges when I first started was the lack of actionable data. I think when I first started, like I actually didn't discover QuantData yet. I was using a bunch of competitor tools, and I actually only started using QuantData in like 2023, 2022, maybe late 2022. And but before that, like you'd have to subscribe to a bunch of different services in order to get everything, like all the data that you wanted, right? All the
Yeah, in one
calculations.
place. Yeah.
Yeah, back then when I was trading with data, I would go into the options chain and I would take a calculator and start doing math. Like tools like quantity and
Hard
stuff, like
mode.
they didn't exist yet, right? Like
Yeah.
we wanted to
Trading on
quick
hard
math.
mode.
Exactly, we wanted to calculate how much gamma exposure there was. It's a lot. It's a lot slower when you have to take out a calculator and pen and paper or your notepad and start doing that stuff. And so with the ability of now with all these data sets, it's quicker. You know, zero DTEs is actually something you can trade very often, very successfully with data. The other biggest challenge was just like seeing seeing so much out there, so much content out there that I personally didn't believe was, what's the word without being offensive here, like not real,
Hmm.
right? Like how many YouTube videos have we seen where someone is trading off of like an EMA cloud and then they claim an 88% win rate or some nonsense like that?
Yeah, just to tell everyone, if someone can claim an 88% win rate on one specific strategy, they would be better than Warren Buffett. So you have to contextualize that. They'd be the richest person in trading markets. It's just not, people lose. Um, and no
100%.
one strategy is the perfect strategy. Um, because I completely agree. I think there's a lot of BS out there. Um,
There's a lot of BS and a lot of like hustling other like predatory practices, right? I am a you know I think some people call me a hypocrite for this because I've done it before. I've worked for these discords. I'm not going to name drop any of the discords and the YouTuber that I work for, but if you know, you know. I'll say that much. You know, where the subscription services and the yearly subscriptions and stuff like that, and the signals, like those payouts, those subscription costs heavily outweigh like what they actually earn in the market. And whenever you want to learn something, you want to sit down with them or whatever, they'll be like, "Oh, hey, like we got to pay gate this. It's valuable information. I've spent 2 years, 2 summers working on this strategy or something, and like I'm going to charge you $250 so that you can learn it. Otherwise, it's closed. It's a closed book for you. I'm not going to tell you." So there was a lot of that, and like I can even say like I paid for so much. My lifetime spent on like courses and stuff was is currently actually upwards of like $5,000.
mhm.
And I will say like more than half of it was like I got scammed.
Yeah.
That's just the truth of it. I got scammed out of that money. It is what it is. There's no refund on that, unfortunately. I just had to learn the hard way, and navigating that through that was an absolute challenge. And I feel really bad for a lot of the young traders trying to get into the market right now because that still exists. There's a lot of that.
Oh yeah, probably more than ever, to be honest. And it's hard to decipher who knows what they're talking about and who, especially in a back-to-back bull market years where everyone looks smart in a bull market, to be honest. So,
100%.
so it's hard, especially towards the end of last year, right, where everything was still going up, and things had been working for people for a while, that it's hard to determine who really knew what they're talking about. So I completely agree.
Yeah, hopefully After Hours doesn't turn into that, but
Hope
we'll
not.
we'll
I
see.
really hope not. And it felt like it was trending in bad directions for a little bit. I do feel like it's gotten a little bit better over the past few weeks. Maybe that's just because I started being a little bit more like if I saw something I thought was BS, I'd block it. So I became a little bit more active on my blocking, but yeah, I hope it doesn't get to that because where it started and from when I started, which you were here earlier than me, but from when I started, wonderful community and everyone wanted to help people, and now it's as it gets bigger, there's going to be growing pains around more degeneracy
Mhm.
and people who sound like they know what they're talking about, but they really have no clue. So um, I hope it doesn't go there. And I think this might be a good opportunity for us to transition to talking about the after hour community
I
a
love
little
it.
bit
Yeah, let's
more.
do it.
Um, so, how did you actually discover the after hour community? I know a lot of us are from Reddit, but how did you discover it and what drew you to it?
Yeah, one of my good Discord friends, Royalty Trades.
Oh
I'm gonna
God.
name drop
All
him right
right.
now. Yeah.
This is
He-
well, this is the third episode now where he gets very a strong name drop is what I'll say. Where last episode I even gave him his own little section in the description because I mean I love what he does personally when I it's a good way for me to start off my morning with his analysis to read. It's a good information to read, but I think he does a lot of good work. So I'm a big fan there.
I love him. He's a good guy. I knew him for I think I can actually say over 2 years now. I knew him from when I ran my own Discord server. And he was a signaler there, and he did really good stuff. And not only did he do that, he was just a really great stand-up guy. Anytime I needed to reach out to him for anything, like he'd always be there. And hopefully I'm the same way to him. I'm very terribly busy now with quant data, but I try my best. Like I do have like a separate section of like Discord DMs that like, hey, if this guy messages it, I'm gonna absolutely answer first. But he showed me after hours. He was like, hey, there's this new app. There's like all these things happening on it. It's kind of cool. Maybe you want to check it out. So went ahead and checked it out. But again, like I didn't sign up for like 3 months after checking out because I just wasn't sure. Heard a little bit of the Wall Street bets, the Reddit stuff,
Mm.
and then yeah. But I'm glad I signed up in the end. So, but that's how I found it, and yeah, here we are.
Here we are. Um, so this answer might be a little bit different for you than some
Mm.
of the other people, which I think is always interesting. Is how, if at all, has being part of After Hour influenced your investment strategy? Which is funny because I like when I asked Fullport did an episode and he said, "Oh, a lot," because he's learned a lot while being on it. But for someone like you, it might maybe not so much. So I'm always interested to hear.
Oh man, yeah. This might be one of the answers you're not gonna look forward to, but I honestly have not. I very seldomly open the app now, but I just want to make that clear because just because there's nothing there for me really. I haven't really learned anything. I just learned how crazy some people can be, full porting their tens of thousands of dollars, turning into millions, and then letting it turn to nothing. Like that doesn't actually help or influence me at all. It just I feel like the amount of work that now, I mean, you could tell me too, like what you think, but the amount of work that I put into some of my write ups, I haven't seen anyone else do the same thing. I haven't seen anyone do like actual DD that's actionable, that helps other people learn. Maybe like it might sound some of the things that other people write might sound really smart, but when I read it, I'm like, eh, like this. How does this really help anyone? I'm not really sure. I've yet. Maybe it's because I have industry experience, and I don't want to be like sound like I have a chip on my shoulder or anything. But that's my honest truth. Like I haven't found anyone there that I've learned anything actionable from. I've just learned how risky some people can be, and it scares me.
Oh yeah. Well, it does. It scares me too, and uh, I have a lot of market experience. I think I've learned specifically more about how short term more traders operate, which was just
Hmm.
not exposure I had to. But from a financial like literacy or anything like that, I mean, I'm the one putting out financial literacy stuff so that people who would never look into it at least have some exposure to it, right? Like that's the whole reason I do what I do. Um, it has absolutely nothing to do with trading. 99% of what I put out there, um, it's more about how to be financially literate if you're successful trading, and maybe sometimes if you're not successful for tax loss harvesting. But I agree. I think there's a lot of, for lack of a better term, crap on there. But if you're able to sift through it, there are some kind of diamonds in the rough that I really enjoy following. I think that's the way
Hmm.
I would put it.
Okay. Yeah, I'm not. I'm just not there yet. I'm. It's. I maybe after hours. Like in my opinion, it's too new for me to really give it a fair judgment. There's a lot of Obviously, I know the crowd it kind of caters towards, and that's
Oh yeah.
fine. It doesn't have. It doesn't always have to have guys like me on it. In the end, if I don't end up being there anymore, like I would have gained my experience from like all the people that I've met. Um, yeah, and it gave me exposure, it gave quantity exposure, and if people want to trade a different way, like that's absolutely fine, so long as they're green. It doesn't matter to me. But the learning portion, yeah, I'm not there yet. I
No worries. I
haven't
mean,
learned anything
I
just yet.
figured that this might be the answer. And it's not that I haven't gotten that answer. When I had Alloy on here, for example,
Hmm.
he said that it didn't really, he didn't like, in terms of a purely trading strategy, no, he hasn't really learned anything or applied anything from After Hour. Um, so it's not the first time I've heard it. Just
Okay.
more, just more. I think you dove a little bit more into it, which I can appreciate. So, and it's not that I agree with to the for the most part, right? I think that there for someone who has a lot of industry experience, especially from a trader's perspective, right, which is not what I have. Uh, there's not a lot on there that you probably don't know most of, um, if not all. So I can totally understand that. Um, but have there been any specific members? And I know I think you were a mod on uh, Never Pullover's Discord. Um, and he's a big account on AfterHour. Are there any other specific members that you've had good interactions with that you've enjoyed? Maybe you met them before you were on the app, so in your mind they're not tied to AfterHour like they are to me. But anyone like that?
Yeah, there's a couple. So I don't know how often they post, but we connected somehow, and it was through after hours. But there's one that's CKF. So I think he's also CKF on After Hours. He was someone that reached out, and I just had really good conversations with him. And Neil, all Betsy, those guys are great. Um, there's one more honorable mention here. I think on After Hours, his name is The Shulk. So the and then space SHULK. And he actually took he's part of my mentorship. He was part of my first round of mentorship, and he's like full 360 his whole trading journey by incorporating like credit spreads, one of my primary strategies in the
Gotcha.
market. And like I've really enjoyed talking to him and just seeing how he's progressed on his own, right? Through my mentorship, I kind of talk. I take people from like I hope that they go into the mentorship from A, like at point A, and then I take them from B to C, and it's up to them to go from C to D. And he's gone to like C, D, E, F. Like he's gone super far.
Nice.
Full 360 on his portfolio, extremely positive now in the market, just really understanding every trade structure that is available to him. So I think he's impacted me because like I think after last year's yen carry trade, which I'm sure everyone knows,
Hmm.
everyone remembers. I'm sure you remember for
Oh,
sure.
oh yeah.
Uh,
That was trying to explain that to people who have no financial understanding really was nearly impossible. So we barely talked about it, but internally, totally wild time.
basically, it was the big dip from last year that actually destroyed a significant amount of my profits for last year. Like I always equated it to taking like two Honda Accords and just throwing it into the river. That's what happened to me on that one day. And
Yep.
seeing how Shulk kind of pivoted from that and like kept going, it gave me inspiration too. Like, hey, like I can't let one day performance, destroy my whole mood in the market, right? Like I'm a trader after all. Like these things happen, and so I need to step back up onto the plate and continue trading as well. And so yeah, huge shout out to him. And another person, Hodler, HODLER. I think his after hours is Hodler underscore beater. I don't know why. I forgot to ask him like why that's his name. Um, but yeah, he's also done significant changes to his whole trading journey just from credit spreads, incorporating credit spreads and incorporating other strategies into his options. And oh, sorry, one more too. I wanted to shout this guy out. I think it's after hours is Narwhal, NARWHAL. Same thing, like 360 his whole trading journey, and
Beautiful.
just a lot of people doing really well.
Awesome. Well, I will put all of them in the description, so people can check them out and maybe follow with how their journey's progressing. Um, I did want to talk to you a little bit about, uh, it's so funny to say out loud. I've never actually said it out loud, but a orangutan army. Um,
Oh yeah.
because I know you're connected there, and for a little bit at least, for the past few weeks, it was almost hard to disconnect After Hour from that because a bunch of the mods are on After Hour. Um,
Hmm.
so how did you get hooked up with them? And what do you do for them? And would like you to elaborate a little bit on what happens over there.
Yeah, for sure. So I will want to say I do want to say like I'm not a mod for them anymore.
Oh, okay. My
I was only a
mistake.
mod for them like in the beginning to kind of help them out. Do like because I never pull it overnight. We had a long conversation. We still talk a lot because he's almost like my good friend now on Discord, even though we've never met. But I love how these internet um, friendships just kind of bloom.
Oh
you
yeah,
know?
it's funny. I was telling someone that in real life today how it's like the internet's weird. You just meet people and you're friends with them and you never met them in person. So completely agree.
I fully plan on like going down to where he's at and having dinner with him one day soon, whenever I find the time to do it. But um, he was one of those guys that just reached out and like he really wanted to learn and like see what the different way to trade. He took everything that I've said like to heart, and then the early journeys of OA, the orangutan army, it just looked like he needed a little bit of help because I ran my own server for many years, and I was like, oh, like some of the permissions and stuff are messed up. Like here's some other ways you could do things, but yeah, that's like the extent of that
Oh,
was the
okay.
extent of what I did for them. Here and there, I'll do like guest classes. If I'm ever tired of quant
Hmm.
data, I'll go over there and hang out and see what they're up to. And then once in a while, I'll when I see there's a bunch of new people there, I'll host like a beginners class to like quant data and data driven trading.
Hmm.
Yeah, that's really it. There's not a whole lot aside from that.
You see, this is how everyone can learn, right? Because I had no idea. I thought you had a larger tie to them. Maybe because I think I saw you host a couple, get those guest classes, maybe early when I was checking them out. So, um, well, I appreciate the insight there. But we'll move on to one of the things that I'm really interested in learning a little bit more about, is quant data. Um,
Oh, my favorite.
exactly. So I guess first, before we get into quant data, the your employer or who you work for, um, for the just there are a bunch of people on After Hours. Some people are brand new to trading. What is quantitative data and how do people use it for trading?
Love it. So the quantitative data, the word actually is scary, right? Because when you think quantitative data, you think like, oh, math, multiplication, division and percentiles, right? It's actually, it can be that at a hedge fund level, but to bring it down to like the retail space, it really is just looking through the options Greeks primarily, especially with what quant data does. We're looking through like not data that's not subjective, right? It's no one's opinion, right? It's data that's objective, it's factual, right? If, for example, if some guy buys $1 billion worth of calls, no one can dispute that $1 billion worth of calls came to the market, right? It's not like a
Someone could
candle,
try.
like a Head and Shoulders.
Someone could try. They
Yeah,
just
there's
won't.
no.
But
Yeah, it's not like someone drawing two chopsticks on a chart and being like, "Oh, price is gonna do this because price like it's meeting up between these two lines." No, it's it's nothing like that. It's factual data. It's data that everyone can agree on that it is happening in the market. Um, and it's just we mix in a little bit of like mathematical equations to it, standard deviations, things like that. And yeah, it's all of that can incorporate into like quantitative data.
awesome. Yeah, I know. There's a big discussion pain point in the community. I'll say is I put out a poll yesterday just in preparation for this, just to see what people thought, and it was which which strategy or techniques uh, of trading aligns more with what you subscribe to or use, quant data or
Mhm.
chartists. And I think 150 people answered the poll, and it was split 49 quant data, 51 like technical analysis. So I know
Oh
there, and
wow.
I know people feel very strongly about which is better. So I'm excited to kind of dive into this between quant data and your actual strategies a little bit more. Um,
Yeah, I love that.
so what is quant data, the tool, um, and why should people know about it?
Quantitative, the tool. So we're an options analytics platform. Everything that goes on in the options market, you can see it happen in real time with quant data. All the calculations of GEX, so gamma exposure, DEX, delta exposure, and all the other two important Greeks that we have, Vanna and Charm. They're all there. And so the importance of quant data is to look at real metrics that are happening in the market, right? Understanding that the market dealers, right, the guys we always say are and who end up winning in the market, that's how they look at the market. Us as retail traders, we'll look at $1 million and be like, okay, like that's $1 million. That's huge. To us, maybe it might be huge. But the dealers, they don't look at it that way. They look at how much delta exposures they have on their plate with that $1 million. Right? They're not actually looking at premium, or actually, they're not looking at the dollar amount at all. They're looking at deltas, they're looking at gamma exposure, looking at where they're exposed in the market and where they need to cover, where they need to hedge. The whole point, sorry, not the whole point, but the whole fact of the market moving up and down is actually moved by the dealers changing their position, right? So for today, if you were to recap the market today, I didn't actually trade today, but I know the market went on a big move.
It's a wild day.
It was a wild day, and I know a lot of people in quantitative caught it because of one of the metrics we talked about. It's the 2% rule, but we'll go over that another time. But with the market dipping so low, and we knew that dealers were likely going to have to force to buy back their positions, pushing the market up, right? These are things that we have to understand in order to capture a move, right? And this isn't something, in my opinion, that you could accurately predict with like two chopsticks, drawing a wedge of some sort. Most of the times when you do that, you're already late to the game. You would have missed something, or you could actually be wrong. But with quant data, like with our tool, and many of the other competitors, but QuantData, in my opinion, does it the best. I'm not biased, I swear. You can actually actively see.
No worries if you are. That's your job.
Yeah. But yeah, you can actively see participants buying their positions back. So buying their short deltas back in quite a hurry, right? And that's what led up to price skyrocketing on SPX, for example, from the low of 59.23 all the way back up to 6,021, which was actually the high of the day.
Mm-hmm.
So without these tools, like you wouldn't really have a target for price. You just wouldn't really know. I know a lot of people would have seen like, oh, like 60-30 should be the target because that's where a gap is. But with QuantData, you can kind of see like, okay, the top is actually 60-20. There's no interest in the market to go above that. So yeah, that's the power of using a data-driven approach. That's the power of QuantData, and that's the power of understanding the options Greeks, because options Greeks is actually what moves the market. It's not premium. It's not your I keep referencing chopsticks. People say it's because I'm Asian, but it just always looks like whenever someone draws a wedge for me. But yeah, it's none of those metrics. The most factual metric is options Greeks and where people are actually buying long and short. Let me add on to this actually and say that over the weekend, I'm sure you're on Twitter, right? Over the weekend, everyone was saying like, oh, the market's crashing, like it's over. We're going to just short the whole week, right? But that's all those doomers aren't actually like I listen very little to the doomers, right? In my opinion, the only data that I love reading the news, but the only data that I personally follow is who's actually long and who's actually short. And we can see that with the deltas. We can see that I can tell you right now that all of the long deltas that we had from February 21st going into March, they actually all continued to go into December. So we can see December is super bullish. And before December, there's a lot of like ups and downs. And so we should be expecting a lot of choppiness. But nonetheless, the year is still bullish. So if you're looking for accumulating shares or whatever, the data says people are still long. No one's still short. Like no one's short.
Gotcha. All right. Well, we are back from my daughter having a night terror. But you were saying that open interest or not open interest, that's something we're talking about with SPOS. But the data is showing pretty bullish into December, which is, I think, good news for everyone. I think there's a lot of fear in the market right now. So looking at data, and if people are able to derive that from the kind of data that you can see on QuantData, I think that would be soothing, for lack of a better term, for a lot of people, right? Because I know, especially around all this tariff talk, that people are, like you said, looking at Twitter and saying, "Oh my God, we got to be short this whole week. This week's doomed." But on Monday, it seems like it's not doomed, right? People were saying the whole week's doomed. So
it's I think on Twitter, the doomers get a lot of attention, and I'm sure they do it for the publicity. It's actually detrimental to the community though, because a lot of times it doesn't pan out. A doomer is right like once every, like how many times have people been saying that last year they should short, and how many all-time highs did they miss? Right, a ridiculous amount, right? I think it's like 50 plus at that point last year.
yeah.
How many all-time highs and it's depressing to see that for sure, because the doom does sell, right? It does sell clicks. It does give a
The
lot of people, and
algorithms
I
love
know
the doom.
exactly. But I personally, like, that's, other people can trade however they want, but from what I've experienced and my industry and all my colleagues, like, we only look at the one factor is who's putting their money where the mouth is, like who's actually long, who's actually short. And so far from what we can see, everyone's been continuing to buy the dip. Everyone is still very long until the end of the year. So, there's no reason to flip our bias until that flips, right? Until everyone actually starts to sell, then okay, yeah, we could be wrong. But for now, I've continued to buy the dip, right? I've continued to tell people in QuantData to buy the dip.
Beautiful. Um, so briefly, right, if someone were to
Mhm.
sign up for QuantData, right, what do you think is the best piece of information that people are able to, if you had to narrow it down to one, right, the best piece of information that people can find on there, or the best setup people can have to look at?
Oh, man, that's a tough one. So I
Not
always
financial
start
advice,
off.
by the way, because
Yeah,
everyone has their own stuff that they look at, and they know what works best for them.
yeah, 100% agree with what you just said. Not financial advice. Make sure y'all got to do your own DD, right?
There we go, the whole
Um,
disclosure that comes with it.
in the quant data, I really like to say that we never want to use one tool in isolation. You got to use a bunch of them so that you have some sort of confluence. But you don't use too many, right? It's almost like have you ever heard about the bridge builder analogy?
I
That
have not.
and we kind of pair. So let me go through it real quick. So on one end of the spectrum, you have the university bridge builder, who's never built a bridge, but he's read every single book under the sun. You know, he's done all his research. He has like a master's degree on how to build a bridge. On the other end of the spectrum, you have the guy who holds the hammer, right? So that's the guy who actually builds the damn bridge. Which side of the spectrum do you think you need to be as a trader in order to succeed? Most people will actually say, oh, you need to be like in the middle, or a lot of other people will actually say you need to be closer to the guy who knows everything, the master degree bridge builder. But in reality, you actually need to be like closer to the guy who just holds the hammer, right?
Oh, for
So
sure.
what
That
that kind
that
of
was where I was leaning towards too, because book knowledge is great, and I can speak to this because I have way too many letters behind my name.
yeah,
But but implementing and actually practical use of book knowledge is not so straightforward when you get to the real world with that book knowledge. So, um,
exactly. So
completely
it's
agree.
yeah, I'm glad you agree. You know, I knew you would agree with this, but that's something we say a lot in quant, and that's because it kind of attests to the fact that we have so many different tools on quant, and if you start using all of them, you're gonna have analysis paralysis, right? You're
Oh
gonna
yeah,
be that university taught bridge builder who can't press buy and sell. Like he just doesn't know. He has way too many criterias that need to be met in order for him to press buy and sell. Whereas the other guy just presses buy and sell. Like, okay, I know this hammer needs to hit this nail or whatever, right? Um, and so I say like if you have like three or four in your arsenal that you're using for whatever strategy that you're using, that's great. My favorites are net drift, so that counts the total calls and puts that are in the market. And I always make sure to filter it, so I only want to see people who are actually buying. I'm not interested in people who are actually selling to open options contracts. So that's one thing. The other thing is I like to look at raw delta and gamma exposures. So those are my top three because I
gotcha.
understand delta to be the base of what the dealers look at. They look at the raw deltas and where things are exposed, and gamma shows us where price is most likely going to gravitate towards because that's where the interest in the market wants to be for participants to get paid. So those
Gotcha.
three, I can't narrow it down to one. It's too hard.
No, that's totally fair, and I think it gives people a good baseline setup, um, for any understanding, not just quant data, but if you have access to that information from anywhere, I think it gives people a good understanding of maybe some things they should consider looking at. So I appreciate that. Um, Anything else you wanted to say about quant data, the as a tool or a business, before we kind of move on to your personal investment strategy?
Oh man, I think quant data is not the only option out there. Like there are other cheaper tools. You know, you don't have to just because I'm affiliated with the company doesn't mean like that's the only one to go with. Go with whichever one that you feel like is going to be useful to you. But I think that if you're not finding success in the market from looking at charts and candles, um, and you're looking for something that's a little bit more data driven, a little bit more factual, right? Because everyone can draw a head and shoulders, and for whatever reason, when I draw a head and shoulders, it looks completely different than someone else's, and they're right and I'm wrong. It's just, if you're looking for something that's a little bit more concrete, come over to a data driven side of things. But it's not the only way to trade. There's so many different ways to trade, and we're not the only tool out there. I think QuantData is what we try to do is put everything as an all-in-one, right? We have options order flows, we have Greek exposure, we have dark pool levels. You get a whole lot for what you're paying for in quant. And yeah, if there's ever any like help that you might need with that subscription, you're able to sit down with me or one of the other guys one on one for, well, as long as you want. Just don't abuse my time.
I completely agree. Very familiar with that concept. I had one more question about quant data, just because there are a lot of new people
Mhm.
in After Hour that are new to trading, right? To me, even having all this industry experience in the financial realm, but not necessarily in this kind of a realm, it
Mhm.
feels like there needs to be some sort of baseline knowledge before you jump into a tool like quant data. So could you touch on briefly what kind of baseline knowledge people should have before just signing up for a tool like quant data?
Yeah, I love this question. I go over this a lot actually in our beginner course, and I would say it's like actually understand what options are. First of all, understand that if you're trading the New York session, doesn't matter if you're trading futures, shares, but I don't care. Understand that options actually drives the entire price action of the New York session, right? If you ever want to like debate on this, you can actually just Google it for yourself and see how much premium actually goes into options and how much premium actually goes into shares and futures during the set time that the New York session is open, what we call the cash session. So that's one. Number two, actually understand what options are. Like Greeks, like it drives me crazy, right? This is one thing in after hours I will say out openly that this is a gripe. People are trading options and they don't even know what options actually are. They think that this is I'm starting to stutter here, but for you, terrified of AI, you can absolutely relate to this this thing I'm going to say. But would you buy a car before you get a driver's license?
Hell no.
Right. So then why would you buy options and trade options before understanding what options actually are? And that's actually a lot of the after hours community. And that's actually why I haven't learned anything yet. It's a lot of people just trying to get rich really fast because they see, SPX contract go from 17 cents to $17 in one day. I mean, you know how rare that is? It's actually very rare.
Oh yeah.
It does happen, but if you think you're going to catch that unicorn just because you're trading options, it's not going to happen, right? And we see so many people hold contracts and just get theta decay or IV crush.
Oh
And then
yeah.
they come and ask, like, oh, what happened? I
What
bought these
happened?
calls,
Yeah. Theta always eats,
price went
bro.
up.
That's what happened. Theta
Yeah,
eats.
and it's frustrating. It's so frustrating. And so if you're going to pick up a data driven tool like Want Data, actually understand, like, go to Investopedia, pick up options for dummies, go to Tasty Trade. There's all these resources that will tell you what theta is, what delta is, what gamma is, what van is, what all these Greek metrics represent in the marketplace. And then once you have like at least an intermediate understanding of what these Greeks mean, then come over to Quant Data or pick up any other tool that will show you this stuff. Because again, once you understand like what gamma exposure is, you'll understand why it's a magnet for price and why dealers are looking at deltas and where they're short or where they're long. And with this data, you can understand like what's the most likely scenario for price based on like how much delta is and how much gamma is in the market.
Gotcha. Perfect. I appreciate that answer because you didn't just say anyone can get it, right? Whatever, like it's great. No, that would not have been the right answer. But yeah, I think that people do need. What I don't want, right, is people to listen here and be like, oh, gotta go sign up for Quant Data, right? Just because there's a lot of people who are new. So make sure you understand. Um, what options are before you get a tool to help you evaluate options, because it's not going to help you if you don't understand options. And to your point, I think a lot of people will get these options approvals by like lying about their options experience to their broker dealer, which is a problem in itself, right? Um, they can trade options, but they don't know what they are because they said they knew what they were talking about. But anyway, wanted to, unless you had anything else you wanted to talk about for QuantData.
Oh no, I'm good. Yeah,
Perfect.
I've vented enough.
So wanted to talk to you about your trading strategy, like how you specifically go about your trading, or
Mhm.
investing, either one. But how would you put it in your own words?
I focus on a lot of credit. So I'm primarily, and this has changed like so much for me, but I'm primarily sell side. I have a portfolio structure that I teach in my classes. I do an 80-20 rule. So 80% of my portfolio is dedicated towards collecting credit in the market. And then 20% of it is dedicated towards going directional. So either like long calls or long puts or leverage shares, which I do a lot of. Leverage shares is a great tool. Um, and I always make sure to collect enough credit before I start spending on debits, which is, I think, once people see the power of structuring their portfolio this way, they actually see their portfolios grow at a steady pace rather than, oh, I won huge here and then I lost a big bunch here. And I've seen people's Robinhoods, that line that you guys always like to show on after hours. People
Goes
go
to
like, oh,
zero.
I'm super high. Yeah, exactly. It goes to zero, or it just like it fluctuates so heavily.
Oh yeah,
But
I
if
saw
you
one the
start
other day.
structuring,
I saw
yeah,
one the other day where it was like the title of the post, and I'm like, oh my God, get out of here. But the title was, "Can you tell when I found options?" And it was like little ups and downs, and then like like mountains, right? Just up, down, trending upwards, which is great. I'm happy for the person, but like, good God, you went from very little volatility to massive volatility. So completely understand what you're talking about.
yeah, the way that I structure it is I would say it's more catered towards like the working adult or someone who actually wants to see themselves become a full-time trader or use the market to pay their bills. Because if you don't have steady growth, you're at the end of every month when you have like a mortgage or a car payment like I do, it actually gets detrimental, right? Like you start worrying like, oh, how much am I going to bring in next month? Like you can't depend on yourself in the market. So 80-20, focusing on collecting credit first. And as soon as I've collected enough credit, that's when I'm willing to spend on like these, long calls, like NVIDIA calls or NVIDIA puts or even leverage shares. I actually think a lot of people in the after hours community forget that there's an asset called leverage shares, that an asset that can't go to zero.
Oh yeah, yeah. I'm a big fan of leverage shares. One, because of my role, I can't get
As much options.
as much into options just because of
Hmm.
restrictions around what I can do. Um, but I can do leverage shares. So I completely agree. I think it's an wildly underutilized thing. Now the leverage isn't options leverage, but it's still leverage.
100%. Yeah, I love it, and I think a lot of people are seeing the power of leverage shares now over in the quant data community.
Awesome. So do you go long shares ever, or are you mostly trading around options for your entire portfolio?
So my portfolio is primarily credit, so it is a lot of options. Long shares, it really depends because I tend to trade names that already have the ability for leverage. So like Nvidia, like who isn't trading Nvidia right now?
Yeah.
There's a lot of leverage shares for Nvidia, NVDL, NVDX, Soxel. That's one that my original mentor Yamada traded a lot of, and now I'm trading a lot of Soxel as well. PLTU, which was an amazing trade right as of late. Um, Just like regular shares, not too much.
Okay.
If I find that if there's not, so I trade a lot of things that have options data at least, so that I can kind of gauge where interest is on the at least on the options chain. And if you don't have an options chain, then I tend to not trade it as much. I just don't feel like I have a firm grip on it, and I'm not willing to risk for that.
Yeah, makes sense. Sorry to interrupt anything about your investment strategy.
All
Anything
good,
else
all
that you
good.
wanted to add to how you would describe your strategy?
No, no. I think that's the baseline.
Awesome. Well, could you elaborate a little bit more about what like a credit spread is, right? Where because I what I don't want people to do, right, is hear, oh, he's going to get credit in the market and then go sell a naked call. Um, because they need to be more aware of their risk than that and what you're doing and understand kind of what you're talking about.
So we kind of look at credit spreads as like selling insurance in the market. So today Tesla had a big drop, right? Um, what I'm doing is I'm selling a sell to open basically, and I think a lot of people in the afterwards they actually don't know you could do this, but how much a put costs, right? When you buy a put, you can actually sell it into the market instead. So if a put costs like $3, you could collect the $3 instead of spending $3 to buy it. The market will let you do that, right? And it's available to everyone. Like that's actually what dealers do 80% of the time. They are short options. And so probabilistically, right, like for today, one of the trades we put in over in QuantData was Tesla dropped below like what, three, I think it was like under 400, 390 or 380 or something like that. It was just suffering today. What are the probabilities in your mind or in anyone in the audience mind of Tesla dropping below 300 by March 21st? So 45 days from now. Now that contract cost trying to bring up let me bring up my options chain right now and just tell you what it costs.
Yeah, I don't know what the probability is, but while you're doing that, I would say probably under 5% chance of that happening.
Yeah, it's ridiculously low. So I'll bring up the entire trade right now. So we sold the 300, sorry, we sold the 295 and we bought the 290 for protection. So that's what a credit spread is. You're collecting the difference between these two strikes. We sold it into the market for 65 cents, so $65 per contract that you're putting in. The probability of profit on this is 87%. So there's only a 13% chance that your strike is going to get met, which means we lose on this trade. So is that $65 that we collected almost like free money? It kind of it almost is. I don't want to say that it's
Do it
absolutely
enough times,
impossible.
yes.
Yeah, I don't want to say it's impossible that we're gonna meet 295, but based on the options Greeks and the deltas available to us, we can confidently say that we have an 87% chance of this expiring worthless, which means we collect the entire credit. Right. So for anyone in the audience, in your audience here that doesn't know what this is, go to Tasty Trade and search up put credit spread. Put credit spreads is actually my primary strategy in the market. Primary strategy. That is the thing that I put into the market most often. They could be 0 days. Most of the time they're 45 and out. But I do a lot of 0 day DTEs. Sorry, 0 DTEs on SPX. And yeah, it's the one driver that's helped me grow my portfolio a lot. And every time I collect some of this money, because when you collect the credit, you get it immediately. You get that $65 from that Tesla trade. You get it right away. I can spend it right away. And so when I put in a trade that has an 87% chance of winning, I'm willing to take that $65 or however much I made from that spread and start buying shares, leverage shares, or start buying like long calls or long puts or whatever it is.
Awesome. Well, I appreciate you going a little bit more in depth for some of the people that are newer to investing and like you said, and mentioned, go check out some of those other resources to learn more about exactly what he's talking about. That's beyond the scope of this interview, right? We're not here to quiz you or get a whole teaching lesson on what options are, but I just wanted to give them a little bit more background. Um, So it sounds like most of the trading you're doing or investing you're doing is is more on the short term side. Do you have any kind of long term investments out there that you have, or is it generally all short term, relatively short term, right?
Yeah, because of quant data, I do a lot of short term trading. Investing, I really like to trade, like take the words investing and trading. I separate them a lot,
Yeah,
especially in quant
exactly.
data. I really like to say like, hey, if you're investing, you got to think about it in like a 20-year time frame, 5+ years time frame. If you're looking for trading, that's very short term. That's like under 1 year. So I do separate. So I do separate my portfolio towards trading, and then one portfolio is towards investing. And that's when I pay myself. Like I pay myself like every quarter, and then I'll with that quarter, like I'll start to buy up shares or wherever I feel like is gonna grow. I still do buy a lot of Apple, just because I want to see it grow. I want to see tunnel vision. I did miss out on Nvidia a little bit, but
Mm.
that's
Well,
okay.
you did pretty well with Apple anyway, so
Yeah, I can say I did pretty well with Apple. Nvidia, I just, I think it's great. The volatility there is great for trading it. So
mhm.
I feel like I haven't missed out there. Palantir is a company I strongly believe in. Shout out to my friend D4D, again from QuantData, for the Palantir recommendation. And sorry, not recommendation, but his idea for it. And I just
Yeah,
fully
yeah.
believed it. A couple other companies that I invest in is, you might think this is a joke, but Grinder, GRND.
I, I can't
I think
actually say that I have heard one other person say that, so not as a joke as well. So
I think that this company is silly. At first it started as a joke. And then it turns out like I started to read a little bit more about the company, saw that it's like one of the only dating apps that actually makes money that's investable. And so I mean right now our average price in Quant is like 13.50. It's already trading at like 17 something.
mm,
So it's been a really good investment so far.
listen,
I
if
don't
it
know how
makes
long I'm
money,
gonna
who
hold it.
cares?
Yeah, it's been great. Black Sky was one that I like often buy a little bit of and sell it here and there. So that's BKSY. None of these are like financial advice anyways. You got to do
No,
your
no,
own
no, no
research. But
financial advice here.
and then from there, it's I like to trade. Or sorry, I like to invest in a lot of like ETFs. NANC is one that I like. That's the Nancy Pelosi ETF.
Well, that
I
one
found
does pretty
that
well.
that one has done really well. 1 year, it actually outperformed the SPY, and so I figured if that's available to invest in, I'm willing to buy it. TSLY is one that I invest in a lot as well.
Is that dividend focused Tesla?
It is, it is. So different purposes for that, but yeah, so far it's been okay, and I think there's 4 companies right now that I in 2024 I didn't want to bet against, and I was right to not bet against them. 2025, I still believe it's not ideal to bet against. So it's Tesla, Nvidia, Apple, and Palantir. So these 4 companies, anytime that they dip, I believe it's a buying opportunity or an opportunity for you to sell puts on,
Mm.
which I have been. So like today, Tesla, Nvidia dipped hard. What did we do in quantitative? We sold puts like madmen.
Oh yeah.
And
I mean,
yeah,
we got real problems if they're going down for an extended period of time, in my opinion.
exactly, exactly. And
Like
I'd be
problems
happy
that
to
are
assume
bigger
the
than
shares.
we lost some money on those shares. Like we have way bigger
Mhm.
problems going on in the world if those companies are just tanking.
Exactly, exactly. So yeah, those are my couple picks
Perfect.
for
Um,
investing.
sorry, I didn't mean to interrupt you.
No, I'm done. I'm done.
Perfect. Um, one of the questions that I had for you, specifically around volatility, right? Because we've had a lot of that this year, is how do you think about trading? Because, like we mentioned earlier, right? Like everyone seems like a genius in a bull market. Um, but how do you think about strategies as we're approaching volatility, which seems inevitable with Trump, whether you, and someone likes him or not, right? He moves the market with tweets. Um,
Mhm.
and it's just a fact of life. So people, traders are going to have to deal with that. So how do you approach your mindset or your strategy as we're entering more volatility? Could still have
I
trend
love that.
upwards like a bull market, right? But but it's going to have a lot more ups and downs than when Biden was in office.
100%, because I know Biden was asleep at the wheel most of the time, right? And now
That's
we
what it
have
seemed like here.
a different animal here in office. And I would say, first of all, like the mindset, you know, it's not like the market, like it's not like we've never seen a red day, right? It almost seems like we were in such a euphoria going up that whenever we come down, everyone all of a sudden is super scared.
Oh my
And
God.
as a retail trader, if you're scared, it actually means one, you're putting in too much money, right? Well, I find that a lot. If you're scared of the market, you're putting in way too much money. Number two, you're not confident enough in your strategy and your knowledge of the market. So these two things would lead someone to, my recommendation is actually to step away. There's no reason to participate in a market where you are scared, because this is the only career where you can go to work and lose money, right? It's not a job at Wendy's where you are guaranteed your pay. So mindset wise, just make sure, hey, the market goes down. Like that's perfectly okay. If you're still bullish though, don't be afraid to buy it back up, right? If you're bearish, different story. But the volatility also for trade wise, not mindset wise, it actually presents a lot of opportunities. We know that when IV is high, it's a seller's market, right? It's a time for dealers to sell contracts into the market and collect premium, right? So as a retail trader, if you're not doing that in a volatile market, then you're actually not taking advantage of what the market is actually presenting to you, right? So when IV is very high, you should be selling. When IV is very low, you should be buying so that you can take advantage of IV climbing up, right? VIX and IV is the only thing that mean reverts in the market. So when IV is very high, we know that it's always going to come back to its mean. When IV is very low, we know at some point it's going to bloom into like 20, 35, something crazy, and then come right back down. That's the whole pattern in the market, right? So trade wise, like there's other trade structures, right? Understand that when IV's high, again, it's a seller's market. When IV's low, when we get back to an environment where IV is low, then you can start buying again. And then mindset wise, if you're afraid, you need to get back to the books. You need to study these other trade structures. You need to make sure that you are confident in your own strategy and you're not putting in too much money, right? We don't want a repeat of what happened on Friday where a lot of hearts were broken, right? They didn't know what to do when things started to turn around on them so fast for everyone that was long or anyone who sold puts. They didn't know how to manage their trades. And that's a problem that I see a lot in the retail market. But yeah, that's my answer to your question.
Beautiful. A great answer to kind of add color commentary to that, right? I think IV is often overshot too in terms of what the actual volatility of the market ends up being, at least historically. So I
Mm-hmm.
think that plays into what when IV's high, seller's market. So love that. Um, and completely agree again with the if you're scared, you have too much money in the market, or you don't have enough conviction in your strategy, and either is a problem. Um, so I can completely get behind that as well. Appreciate the insight there. Um,
Always happy to share, man.
appreciate it. Let's see. What else did I want to ask you about? So with all of the changes around, or not changes, but the the way the world is going with
Mhm.
AI and changes of leaders. I was watching the Joe Rogan episode with Mark Zuckerberg, and I didn't realize this, but Mark Zuckerberg said, and he would know as someone who looks at like social data all the time, I think almost zero incumbents around the world won their election, right? So there's a massive policy change coming in. Um, so with that comes the change of what sectors might do better, um, or what markets might perform better. Are there any kind of asset classes or certain markets around the world or sectors that you have high conviction in from a trading perspective?
Trading perspective, I think the sentiment for anything China related is bearish. Just because, there's always that, stigma that, whenever we're facing any sort of turmoil, we blame it on China. We've seen this commentary before. And so I think like solar is probably going to take a hit, right? Because a lot of the solar panels come from China. With the exception of FSLR, for whatever reason, that company's doing okay. Nuclear is probably going to do okay. But then I think most of the focus is still going to be on tech and because tech is so big now, right?
Yeah.
Tech has just, look at the Dow. The Dow was supposed to be industrials, but how much tech
changed? Didn't
doesn't make any sense.
Didn't Nvidia just join the Dow recently?
I can't remember, but I
think
wouldn't
they
be
did,
surprised.
which is funny, just because it definitely was meant to be industrial, right? The Dow Jones Industrial. So
yeah,
but
funny. Like Apple's in it, Microsoft is in it. It doesn't make any sense anymore, and that's why no one focuses on Dow anymore either.
And 30 companies, like what kind of index is 30 companies? To me, it's wild that it's still on like the top 3 indices, right? To me, it should be NASDAQ, S&P 500, and the Russell, to give you a better gauge of what the market's doing, not an arbitrary 30 companies. That's just my opinion, not financial advice. But
I really agree with that, and the fact that the Dow is like one of the oldest ones, but SPY ended up being the international ticker, right? If you go to Japan, if you go to any other major market, you can participate in the S&P/X, but you can't participate in the Dow. And so that says a lot, like how much of that ETF and that indice actually just fell off. And that's fine. But I think, like, back to your question, tech is going to reign supreme this year too. I think it's just going to be an all-out tech war, and that's just how it is. That's how it's going to continue being until something new comes up. But the problem with that, anything new coming up, is that most likely it's just going to be tech related.
Yeah, or gobbled
and
up
so
by
tech is exactly, it's just going to continue booming, right? When we talk about AI, when we talk about quantum, it almost relates entirely to tech. So there's almost no reason to look at anything else right now. I think that's just going to be the powerhouse for many, many, many years to come.
Perfect. I agree. I have one kind of final question for you around investment strategies, not necessarily yours, before we start to wrap things up. But one of the big things around, and maybe this is not kind of in your realm of what you're dealing with daily since you're doing more trading, but you could still potentially present some insight here, is diversification around SPY, right? It used to be you buy SPY and you could consider yourself diversified. But I think now the top 10 make up 45% of the index. So I just wanted to get your thoughts around how or what people should be doing or could be doing around diversifying now that SPY is maybe not so diversified.
Yeah, I like this question a lot. I think so personally, if you're an active investor, I think you should have very little in SPY. This might be controversial, right? But again, personally, I've never seen anyone be really, really rich or really wealthy or where they want their financial situation to be based on investing in just SPY. I think it's lazy investing, right? And if some people, it's okay. Like if that's what you want to do, by all means. But in the world today, which again, like Mag 7 exists, right? Mag 7 is entirely dominant of SPY.
Oh, yeah.
Exactly, right? And if you wanted to really get ahead of the curve, I would actually start looking to have a safer portfolio for investing, right? Things like that are super safe, blue chips, Apple, right? And then have some things that are in the realm of potentially expanding, right? I know everyone talked about quantum last year, and that was thought of to be the buzzword of this year. It is no longer because of what NVIDIA CEO has
I
said.
think it still might have its heyday. Not to interrupt, but
Yeah,
I think
I
it.
think so too.
I think people
But I'm
shot it
just,
down based on what Jensen said. Um,
yeah,
but then you listen to some other things, and I specifically listened to the CEO of QBTS, right, which is which is smaller than some of the other ones, but still a big player in the space. And he seemed e- eager to get to Q4 earnings, which is going to be in
mhm.
March for them to release. So I'm not quite sure that it won't have its day maybe later in 25.
Maybe. I'm just a little hesitant to like put that out there so that everyone on After Hours or
Oh, for sure.
whoever's going
Well,
to listen
let me
to this is like,
follow
oh, I'm
that
going
up
to full port.
by
Yeah.
don't full port into quantum. That wouldn't be what I'm not doing it. I don't currently own it. Um, but I do think the sentiment, just because a couple CEOs who are directly potentially competing with what quantum stocks can do said it's not ready yet, I wouldn't fully write it off this year, I think is what I'm trying to get at.
I love that. Okay, I totally agree with you there. Don't write it off entirely. I will say, like, if you're this is totally age dependent, right? If you're young, like, you should be risky because there's a lot of time for you to make up that money, especially if you're like, again, like same situation that I was in, living at home with mom and dad, no real bills, you have a steady job, you have some income. You should absolutely be a little bit riskier with your investing portfolio. The other thing is, for investing, don't forget that you can use options as part of your investing strategy, right? Like you could sell puts, you could sell covered calls if that's something you want to do. I don't do too much covered calls, but you could sell puts all the time. And that heavily like accelerates some of the cash flow that you have to spend. Diversification, again, if you're young, like just be a little bit more aggressive. If you're a little older, and you want to buy SPY, like don't put that much in there. If you want to be someone that's a little bit more aggressive, start looking at these tickers that are actually moving, like Palantir, Nvidia. I'm sure it's going to have its day again. I'm sure again, like Quantum, if you believe in it. And then yeah, there's a lot of other tickers out there. And then don't forget about leverage shares. Now we don't hold leverage shares over quarters because they do decay,
Mhm.
but you can still use that as cash flow. For example, I was talking to a gentleman in Quant that wanted to buy Palantir and was very bullish on the earnings. Well, convinced them to look into PLTU instead,
Oh
and then
God,
when PLTU
did he
went,
make
PLTU
40% tonight?
exactly, he made 40%. Now he can take that 40% and plug it into Palantir, right?
Yeah,
That's extra
plug that
that he
right
had
back into
conviction.
the underlying and take some of those
Exactly,
gains and do something fun with it, right? 40% in one night. That
exactly.
you could be done for the year if you really wanted to be.
Absolutely. And so yeah, that's something people forget about. So there's just all these different ways to maneuver in the market. I think I stand firm on the fact that I still don't truly, if you're under 40, I don't truly believe in fully diversifying.
I
It's a
don't
lazy and
disagree,
slow
right?
way.
Right? I do this for a living for people,
Hmm.
and I have a different perspective because I work with people that are pre-retirees generally, right? Um,
Hmm.
so they have a different story, but I also help manage 401k fund lineups, and when I'm working with a participant, if you're under 40, you better not have any like bonds, right? Just to start off, right? Get get out of here with that. You need to be taking a little bit more risk. Um,
100%.
and you shouldn't be in equity income at 25, right? So I think there's definitely some validity to what you're saying around how based on your age and what your goals are, um, around this less diversification might be better.
100%. Yeah, hopefully I answered that question well
No,
enough.
beautiful. I appreciate it. I did want to start to wrap this up.
Let's do it. Yeah.
So this is going to just be more around kind of pointing people in the right direction. Maybe people who are new or even more experienced that can still take tidbits. So what do you think is the most common mistake that investors make, whether it be seasoned or new?
The biggest mistake, there's a couple, but I think the main one that goes with seasoned or new is oversizing on a position, um, not following their goals and their rules and their risk management. Because even seasoned traders, like myself, yen carry trade, I threw 200 cords into the river. That's oversizing for sure. Um, yeah, and then young guys, like, starting out with a 3K port, putting in $1,000 in a position. That's a third of your portfolio. That's that's at risk. It just doesn't make a lot of sense.
Perfect. Um, let's plug QuantData real quick. So I'm sure they'll be on your list, but including QuantData, any tools or resources or habits that you would recommend to help investors improve?
I think staying up to date with news. So I'd stand very, what's the word? I don't want to stand, but like I really do advocate for the trio, WSJ, Barron's, and Market Watch. I almost read them like daily. Every morning, I'm actually on Market Watch to see like what's the quick. It's like the quick fire news. It's a little bit longer than Twitter, right? Whereas Twitter is like 2 lines.
Yeah.
Most tweets are 2 lines, but Market Watch has like a paragraph and a half sometimes of like things I may have missed over in Asia or London market or something else that happened in pre-market. Staying informed, and I really religiously read these three. The fourth one, I'm starting to like feel a little bit iffy about, but investing.com. I subscribe to that one as well. I feel like sometimes they have really good stuff, but sometimes it's just like AI rewritten stuff.
I
Yeah.
mean, there's a lot of that
Yeah.
out there. So some of it's good, some of it's
Yeah.
bad. I think anything timely that's written by AI, maybe not so great. I think timeless AI things can be relatively good.
Hmm. Yeah. So those three, and then the maybe fourth one is investing.com.
Perfect. Um, any other tools or resources other than kind of staying up with news?
No, not really. Just make sure, one thing I'll say this, like, if you're really serious about trading, like, you got to get a premium broker, like a broker that actually has a lot of metrics and details. Because I know most people start off with Robinhood, right? But it's so bare bones, like you're missing a lot of
Yeah.
information. Like if you're talking about like volatility metrics and um like the volatility smile, like I don't think Robinhood has any of that. But if you step up to a premium broker, that's when you know you're doing this for real. Like you're very serious about trading.
Who would
Where a
who would
brokerage
make
actually
that
has.
list in your opinion? I mean, I have my opinions, but
Yeah. um, so I'm in Canada, so I actually don't have a lot of tools available to me. I only have a
gosh,
select few brokerages that I personally use. So Questrade makes the list for sure. Questrade is where my brokerage is, where my primary brokerage. I do have a small account on Moomoo. Like I like Moomoo a lot. It has a lot of these tools, albeit it is delayed. Some of the data that they have is delayed, but it's still useful to you to see that this data exists, right?
gosh.
Interactive brokers, but you do have to subscribe to like the premium data feed. BMO, that's a Canadian brokerage. BMO, they also have really good tools. And then in the states, I think it's TOS and Tasty Trade. Like those are the
Gotcha.
two.
Yeah.
If you
TOS is
start using
Schwab.
like, yeah, right, TOS is Schwab now. I forgot that they
Yeah.
bought each other. They bought them out, but
Yeah, yeah, yeah.
I think like
Schwab
if you're
bought
using
TD
Webull
Ameritrade.
and Robinhood, you're missing out. I think you're missing out on
I
some
think the
things.
one thing that people need to understand about Robinhood, I think it's great for people who are first starting out, and it's easy to sign up. They have a cool match, uh, which is nice. But you have to think about they're not a they're not a nonprofit, right? And they're giving out
Hmm.
money. How do you think they're making their money? And I read an article last year about how they are 100% selling your data and giving you delayed data so that people can capitalize on what you're doing. Not to saying that other firms aren't selling data, they are, but but for the lack of tools that you're getting and what they do on kind of their back end, I think I personally wouldn't set a Robinhood account up. Um, but I can understand the appeal to it. But I agree. I think a premium broker makes a lot more sense.
100%. I think most people like Robinhood because it's commission free, right? But I
Everyone's
mean,
commission
are you?
free nowadays, at least here,
Is it
right?
really? Oh,
I
okay.
mean,
Here in
Schwab.
Canada, it's not the
So
same.
Schwab was the first one in the U.S. that went to commission free. Um, and then everyone had to follow suit because there was absolutely 0% chance that you could compete, right? Um,
Mhm.
so I can give a little bit more context here because I do this for a living for other people, right?
Yeah.
Um, and so Schwab was the first one that went commission free. Everyone else kind of followed suit. I mean, there are every once in a while very small fees, but they're fees. They're not Schwab commissions. And Market Maker, I talked to someone on the back end there, and they make more being market makers around people doing way more trades and spreads and things of that nature than they ever did on commissions. Um, Not even close. So
Wow.
so all the states are pretty much commission free. If you're on a broker that you have to pay commission, you need to change brokers immediately. Um, so I can kind of give that background. Yeah, the market makers loved it. It took them a while to figure it out, but as trading volume increased, spreads were easier to take advantage of.
Mm, I see. Well then,
Um,
there you go,
anyway,
man.
back to you. Um, what do you think the best piece of advice that you ever, investment advice, is that you ever received, or trading advice? Advice around the
Don't.
markets.
Yeah. Don't add on to losers if you're trading. I think more often than not, when you're trading and you start, what is it, dollar cost averaging into your losers, you end up losing more. And I really think that if you don't believe that, like, prove it to yourself in a journal. So two things actually, like dollar cost averaging into losers, and then journaling it, because it takes both of those metrics to kind of understand that, yeah, you probably shouldn't be buying into your losers, right? More often than not, you're losing more. And like really change that attitude towards like investing and trading. Split them up. Like it is not the same thing. People who mix trading and investing end up having a hard time when they step into the markets and they want to, they have a goal for like this specific thing. It messes you up. It messes you up for sure.
I completely agree. Um, and I've recently read something that, generally speaking, dollar cost averaging doesn't work, especially over a longer period of time. You would just have been better putting it into the market immediately. Um, I think there might be something to say for like dollar cost averaging over 2 or 3 weeks, just because that takes out some of the timing risk. But certainly, dollar cost averaging over like a quarter or 6 months makes absolutely zero sense. Um, but I agree with most of what you said there, so I appreciate that.
Let me quickly add on
Go for it.
to this 1 minute quickly add on, but like what I see a lot in retail traders is they actually, like, say they're in a SPY call, right? And we know there's one truth to options, that's that all out of the money options contracts expire worthless. So why would you add on to your loser there if just
For
because it's
options,
down?
I don't believe in that at all, really. So
It's it's actually horrifying. I've seen people like they're down 50% of the position and they buy more.
yeah, time to average
Oh, it's
down.
at a discount right now. No, dude, it's out of the money by a lot. Like it's going to expire worthless. You're going to screw yourself by buying more, and then what do you know? It just goes to nothing. And so on long options, absolutely don't do it. Leverage shares, if you're still firm on your bias, but don't go crazy. But yeah, usually adding on to your winners, it's much more fruitful than you adding on to your losers. But yeah, that's the end of my spiel there.
No, I agree. I think averaging down on a like a just for example, what we talked about earlier, maybe if you're one like on with Nvidia's ride down, right? If you're buying the dip, but maybe it hasn't finished dipping next week, right? Go ahead and average down. I wouldn't bet against Nvidia in the long term, but certainly not in options. I think that would be. I didn't even think of that when you were talking about it, to be honest. If you're doing that, I think you should probably stop, or
Yeah.
look into something else. I didn't even. That wasn't even on my radar when you brought it up, so I agree there. Because they can be worthless. It's not like they'll still have some value, and maybe you lost a couple dollars, but eventually it could rebound. No, they're going to expire worthless. So that wasn't on my radar. So if you're doing that, I would recommend maybe stopping. Um, but anyway, um, anything else? I think that's really all the structured questions I had for you. This is easily the longest episode, and uh, I appreciate your time here. Is there anything else you'd like to share with the community about kind of your journey or your approach?
Um, my journey and approach. I think well, first of all, I want to thank you for having me on. Yeah, this was like almost 2 hours, and I'm getting pretty hungry, but I was so involved and so intrigued by this chat with you that I had to stay on for as long as I could. So again, I appreciate you having me on, and hopefully this helps people in your audience and helps people in after hours and or whoever else is going to listen to this. And I'll say like I might have photos in like the Nasdaq, and my team goes to the New York Stock Exchange and stuff like that. But I started just like the same as everyone else. I just put in a lot more effort, in my opinion, and I see a lot of half-assing in the market from retail traders. I'll tell you that if you think that's the kind of effort that's going to make you successful and wealthy in the market, like you better just stop. But if you do want to do this, if you do want to put in the effort towards trading and making the market pay you, and you want to be someone that steps into the market and is confident that they're going to get paid, then you got to put in the work. And it's not rocket science. It's not rocket science. It's you really just have to show up and put in that work. And don't be afraid to ask the dumb questions. Some people might tell you off, but hey, if you have a question and you want to know and you don't know where to find it, just ask,
Yeah,
because someone is going to see you like put in that effort, and that effort makes people want to help you, right? Like guys like you, terrified of AI, guys like we talked about full port or bust. There's just so many people that are willing to help you if you just show that you're trying. But don't waste people's time, though. Don't waste people's time, though.
no, completely
That's
agree. Couldn't agree more, to be honest. I think that both of those things. Um, I say all the time, and I've said it on previous episodes, the market doesn't give a shit about your ego or your feelings. If you're going to put in half effort, it's going to take half your money if you're putting it in. Um, so you need to be disciplined and learn as much as you can, and don't be afraid to ask questions. So I completely agree. Um, all right, I'm going to hit you with, I know you said you're getting hungry. I'm going to hit you with a couple rapid fire questions, and this shouldn't take more than 2 minutes.
let's do it.
So what is your favorite song right now?
Oh man, I've been listening to a lot of Rage Against the Machine,
Okay,
Bulls on Parade, just because the market is going crazy.
getting you hyped for the day. Gotcha. Um, all right, so let's say you were flipping through the channels right on the TV. Not that anyone does that anymore. Maybe I dated myself. But what movie could come on and you physically can't turn the channel? You have to watch it to its end.
Oh, it's gotta be like the Matrix, like any of the Matrix series, the
Oh yeah,
trilogy. Well, it's not a trilogy anymore, but yeah,
not anymore, but
I love it.
we don't count that one, the most recent one. At least I don't. Not compared to the other three. Um, do you have a favorite quote
um,
or kind of a
oh man,
mantra, maybe?
oh man, that's a tough one. No, not right now. I think not right now. Maybe a new one will come for me this year.
Gotcha. No worries. Um, so last two, if you could spend the day with anyone, dead or alive, who would it be and why?
Dead or alive? Oh man, I would want to. Probably. Oh, this is tough. Dead or alive, eh? Oh, you know what? I would. This might be interesting, but I want to see like Kim Jong Un. I want to ask him why. Like,
Fair
why all
enough.
this craziness, dude?
Can't argue with that, right? Some people dead, right? Uh, could still provide insight where it's like questions will never be answered. So I can't
Oh man, yeah.
can't disagree with that one. And then this one's kind of an after hour degeneracy fun one, not financial advice. Probably don't do this. But if you could and you had to gun to your head full port into any one investment right now, what would it be and why? Not why, just what would it be?
What would it be? Oh, it would be what's Nvidia at right now? Under 120?
Yes.
Probably Nvidia.
Right.
If it's under 120, I would.
Okay. Perfect. All right. Well, I really appreciate you joining me and taking your time and helping the community learn. I certainly learned a lot tonight, so I appreciate it.
I appreciate you, and I appreciate you spending all this time with me too, because I know you're not on the West Coast, so it's pretty late for you.
It is, but no worries. I'm a junkie for this kind of stuff, so um, I'm happy to do it. So thanks again, and thank you to everyone who tuned in, who's still sticking around at this point. Hopefully have more of these coming out, and hopefully see you again here soon.